Good evening and welcome to Morocco Market Watch on Bourse News Network. We're here to bring you the latest updates on local and international financial news for the week ended Friday, May 31st. In today's news, the Casablanca Stock Exchange closed on a bearish trend for the third consecutive week. The MASI index fell by 45 basis points, settling at 13,310 points. Similarly, the MASI 20 dropped by 24 basis points to 1,073 points, while the MASI ESG decreased by 41 basis points, ending at 965 points, with a total trading volume of the week at 1,110,844,606 Moroccan dirhams. This week's trading session top gainer was Morocco with a spike of 7.12% to reach 391 dirhams. On the other hand, SM Monetique was the top loser, dropping by 12.19% to 169 dirhams. Let's take a look now at where the international markets closed. Morocco's central bank, Bank Al-Maghrib, is expected to maintain its key interest rates at 3% due to slowed growth and decelerating inflation, according to BMC Capital Global Research. Morocco's economic growth could reach 6% by 2035, driven by infrastructure projects for the 2025 Africa Cup of Nations and the 2030 World Cup. The continuous rise in exports, a trade deficit at 20% of GDP, and healthy foreign exchange reserves of $36 billion were also highlighted. Morocco's industrial sector is evolving towards high value-added sectors, supported by a revival in domestic demand, easing inflation, and improved purchasing power. Government social and housing aid programs further contribute to this positive trend. BMC Capital Researchers emphasized Morocco's resilience and adaptability, positioning the country for sustainable long-term growth despite economic and social challenges. Next in our highlights, oil prices climbed on Wednesday due to rising expectations that the OPEC Plus group and allies would agree to continue voluntary crude oil supply cuts at the group's next meeting on June 2nd. Previously, the OPEC Plus group decided to cut production by 2.2 million barrels per day. Additionally, escalating tensions in the Middle East, a key region for major oil producers and trade routes, continue to support the upward trend in oil prices. Conversely, expectations of delayed interest rate cuts in the U.S. reflect sluggish demand, limiting price increases. High interest rates strengthen the U.S. dollar, making oil more expensive for holders of other currencies. Here's a look now at foreign currencies and major commodities. And that was all I had for you today. Thank you again for watching Bourse News Financial News coverage. I am Benani Ashraf. Stay connected, and I'll see you soon.